Good morning. Welcome to Stock Market Today. It's Friday, October 16th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at CAI Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by CAI Analytics. Head over to CAIanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as we also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities were mixed in Thursday's trading. Major indexes ended just off the session highs after erasing bigger losses. Dow, S&P, and NASDAQ all closed lower, but the small caps reversed in a big way to close higher by about 1% on the day. At the sector level, healthcare was the worst performer. Comm services also lagged. Leadership was seen in energy, financials, and industrials. Treasuries were a little changed. The dollar was stronger on the major crosses. Gold finished up 10 basis points. WTI crude settled down 20 basis points on a Thursday afternoon. So we get to the desk this morning. S&P futures are a little changed. It's been a mixed bag throughout the morning. That's after Asian markets were mixed overnight. South Korea and Japan lagged. Hong Kong gained nearly 1%. European markets are higher, but still on track for big losses on the week. Treasuries are unchanged to slightly firmer. The dollar is weaker versus the yen and sterling, and little changed against the euro. Gold is up 20 basis points. WTI crude is down about 1.1%. To kick us off on a Friday morning that sees stalling action enter a third day. But major markets continue to hold breakout levels across the board. So just a reminder, those levels for SPY, call it 340. Qs, 280 is the spot. 160 for IWM, and IWM is important because we got good information there yesterday from the small caps as they tried to break below that 160 level, but rallied to close up about 1% on the day near the day's highs. So remember what we've been saying about the small caps. The fact that they're participating is bullish from a breadth standpoint. The fact that they're actually beginning to outperform a little bit in the near term speaks to risk sentiment in the marketplace in general. So these are the key levels. The way I'm framing it up here at CAI Analytics is we're holding above these key levels. That is important. However, in the near term, our overbought, oversold indicators for all three of these major market ETFs remain in overbought condition. So the ideal situation is to hold these levels, see that indicator move towards an oversold position, and that to me is a sign to get more aggressive on the long side of the portfolio. So that's the roadmap, that's the framework that I'm using. If we're above those levels, the odds are we're going to take out highs, right? For the Qs and the SPY, it's September highs. For the IWM, it's the highs from earlier this year in the January, February timeframe. So something to keep an eye on as you're mapping it out. Your thoughts and your strategy in the days ahead. Monitor those key levels. Look for oversold conditions. That would be, to me, your trigger to get more aggressive on the long side of the portfolio. So taking a look at our market in a minute now. What are we looking at today? Well, large cap stocks stall, but small caps buck that trend. FanMag continues to consolidate on both an absolute and relative basis. We go through that in our note. We also go through the copper to gold ratio, which is at an inflection point, and it's a key dynamic in our growth versus value debate. Too early to call a bottom in energy. I know I've seen a lot of smart people whose work I respect, are out there calling a bottom in energy. And maybe they're right. Maybe that proves to be the correct call. It's certainly, from a sentiment standpoint, it can't be more washed out than what we've seen recently. For me, though, as a trend person, I need to see some traction to the upside before I'm willing to say that this downtrend in energy is over. So it's something that I'm monitoring closely. I've actually printed out a fair amount of information that I plan to read over the next few days to kind of get up to speed on the space. But we'll look at it a little bit later on. For now, I think it's too early. As I said, futures point to a mix. Call it a mix to slightly higher open here this morning. Taking a look at the major indices from a power bar perspective, the Dow still even. We've gone from 5 to 5 to 3 to 3 after putting in a flat session yesterday. S&P 500 down 11 basis points, 136 to 70, bulls to bears there. NASDAQ was an underperformer, but still solid from a power bar perspective, 32 to 6, bulls to bears. Small caps, there they are, bucking that trend. Big reversal to close higher by 1%, 767 to 240, bulls to bears. Bonds slightly down tick. Energy was your leading sector, but the group from a power bar perspective is still bearish, with 7 bearish stocks and only 2 bullish stocks. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes across the board are mixed. Taking a look at our stock of the day now, we've been paying attention to the small cap space, and this one certainly fits the bill, right? We've been talking about small caps, talking about their outperformance, talking about their participation, seeing some rotation into the group. So I've started to pay more attention to some of the names in the space. And what I wanted to see was within the context of IWM being overbought, if there were any names that were actually oversold. And we came out with CAI International, CAI with a very bullish Chaikin power gauge rating, strong trend above the rising trend line. Trading companies and distribution is a strong industry group. So what I see here is a very bullish stock outperforming the market that is now oversold with bullish money flow as it is on the verge, right, trying to attack 52-week highs. So that's a compelling setup to me. That stock looks interesting within the context of a bit of a rotation into the small cap. So definitely a name to keep on the radar screen. Maybe it sets up here in the near term, but CAI is one that I'm paying close attention to here and now. I featured it in my note today, and I'm featuring it here for you all to take a look at. I definitely think it warrants some increased work and attention here in the near term. Let's hit our sector tracker now. Movement over the last 5 days. So after 3 days of stalling activity, we get a bit more of a mixed bag, right? No longer with all of the groups green. Tech still at the top of the list, followed by discretionary and staples. Comms and industrials are also higher over the past couple of days. It really just has been choppy trading. There's no two ways about it. That stalling activity is playing out here over the past few days. But remember, that's the near term, right? So you have to know your time frame. If you're a short-term trader, well, then the trend for you is choppy. If you're a longer-term investor, the trend is still to the upside. Lagging groups over the past few days: utilities, materials, and healthcare, followed by fins, energy, and real estate. And the financials, I had been paying close attention, and I've been wanting to pay close attention to the financials, largely because of some of the activity that we've seen on a relative basis. If we look at XLF relative to SPY, it had been showing signs of stalling out within its downtrend. And I thought that we had a potential catalyst here in the form of bank earnings this week. But so far, that's not panning out, right? Now, by no means have I turned bullish, but it was, I wanted to keep an eye on it, right? There was a potential change in that relative relationship. So I wanted to keep an eye on it and see if it could get some traction to the upside. So far, that is not the case. Our industry in focus today: pharmaceutical services. This has been a lagging group over the past 6 months, underperforming the S&P by about 9.5%. Has a weak power bar ratio, 14 bears for 4 bulls, ranked 20 of 21 subsectors. Moving out of the basement, moving up 1 slot over the past week. So some of the names there that we want to avoid: Reata, RETA, very bearish; Axum, AXSM, very bearish; and Revance, RVNC, very bearish Chaikin power gauge ratings. The ETF itself, though, is a little bit more of a mixed bag. The ETF has a bullish rating and is in a strong trend. Now, there's that ratio. It's punk. Money flow has been mixed of late. Fund is overbought, just like the rest of the market. So we have a bullish rating, but it's the relative strength here that keeps me at bay for the time being. I think it's something to pay attention to. We're on the verge of a breakout, kind of failing here in the near term, but you have a solid support level in the $42 to $44 range, call it $42 to $45 range, if you will. But overbought in the near term, probably needs a little bit more time. We'd love to see the relative strength continue to improve. You can see the intensity of underperformance is not as severe as it had been back in the late summer and early September timeframe. So we're seeing an improvement in relative strength, but just not there yet. So something we want to keep a close eye on as we look at XPH, as we're thinking about ideas when the markets get to an oversold condition. This might be an area to look if that relative strength continues to improve. But for now, not enough there to get me excited about the space here in the near term. Let's take a look at what's trending now. Yesterday's S&P 500 gainers and losers, our movers and shakers. APA, they provided a 3Q update. Investors like what they heard there. Again, energy was strong yesterday. A stock up 6%. Schwab earnings sent that stock higher by 5%. L Brands, nothing company specific to drive that name higher by 5%. Walgreens, WBA, Walgreens Boots up 4.8% on the heels of their earnings announcement. And WestRock, WRK, nothing company specific there. Stock up 4% on the day. Very bullish rating here at CAI Analytics. Let's take a look at Vertex now. VRTX down 20% after providing a clinical update that apparently did not make investors happy. Stock down 20% on the day. Boston Sci results on one of their products didn't meet the non-inferiority endpoint. Stock down 4%. UAL earnings announcement sent that stock higher by about 3.8%. Akamai down 3.75%. Akamai is in the same business lines as Fastly. Remember, Fastly came out yesterday and pre-announced that their largest customer, TikTok, had pulled back on spending. So they cut their guidance for the quarter. Made some commentary about the rest of the year. That's Fastly who did that. That stock was hammered, down about 27% on the day. Akamai goes along for the ride. Content delivery network down 3.75%. INCY, no company-specific news in INSEE to take 3% out of that stock on the day. Let's dive in. Semis paint a bullish picture, and this is really what we've been talking about from a trend perspective. Again, knowing your time frame is important. We're choppy here in the near term, but bigger picture trend largely remains intact to the upside, and we'll continue to take cues from semiconductors, especially their relative performance, which is what we're looking at in the main panel of the chart here. SMH relative to SPY made a new high this week as it trades above the 200-day moving average. Really, the only knock I have here is that the ratio is somewhat extended in the near term from the moving average. If we look at the ratio from a momentum standpoint, the RSI is in bullish ranges, so that is compelling, keeps the upside momentum intact. Semis on an absolute basis recently ticked at an all-time high and are in a solid uptrend off of those March lows. Remember the importance we place on semiconductors, especially that relative strength. So it was a big part of the reason that we started saying we wanted to start to put money back to work and redeploy capital back in the mid-September timeframe. Was kind of this breakout in semiconductors and the momentum that went along with it. So that remains intact from a bigger picture perspective. So we'll continue to watch that closely. But right now, really across the board on Fridays, the themes and relationships that I look at, not seeing any signs that indicate that the intermediate and longer term uptrend is changing its position here in the near term. So choppy, but largely the trend remains intact for the markets, backed up by some of the key themes, relationships, and metrics that I look at and that I write about in my note every Friday morning. So within that is the growth to value theme, which is still consolidating. Now, we have seen some rotation, right? There's no two ways about it. For the past couple of weeks, we've been talking about small caps and the relative strength there, and maybe some push to value, if you will. We've talked about the materials. We've talked about industrials. It largely stems, I think, from money rotating out of these big growth stocks. On a relative basis, you can see the Vanguard S&P 500 growth relative to S&P 500 value still very much in that consolidation. Now, remember, back at the end of August when we said that this relationship was extended from the 200-day moving average and that we didn't want to chase it. Now, the trend obviously still very much to the upside. So the question is this simply a consolidation after becoming extremely extended or the start of something more? We don't know for now. We're not getting any clues from RSI, as the RSI of the ratio is holding bullish ranges. And if you take a look at the cues against the SPY, it's largely been flat on a relative basis for the past few months. So to me, it looks like consolidation, but again, no signs of a breakdown just yet. So obviously some rotation playing out. It's not, to me, growth is not the all-in bet that it was. Right? There are other pockets of strength cropping up in the market. And to me, overall, that's healthy. That speaks to expanding participation, expanding breadth within the marketplace. So we're continuing to watch this one. And then again, as I said on energy, it's intriguing, but I think it's early. Take a look at XLE, below the 50-day, below the 200-day, both declining. RSI mired, stuck in bearish ranges from a momentum standpoint, so no real shift there yet. And take a look at the scooter at the bottom of the page, pinned to the floor. So the relative performance is not there as well. To me, I start to get more intrigued if we can get some upside momentum through the 34 level, through the 50-day moving average. As I said, I'm going to be spending some time reading up on the group this weekend, but not quite there yet. That'll wrap us up. Hope everybody has a great weekend. Take us for a test drive. I'll be back Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.